So we've had our Desi December, we've held our crossover services and eating the leftover jollof. Now it's time we ditch all that and get real about what 2025 holds for Nigeria's economy. To help us make sense of the numbers, policies and promises, I'm joined by two brilliant minds. First is Oladele, CFA, a personal finance guru who's on a mission to ensure your wallet survives and thrives through the twists and turns of economic reform. And of course, staying with me is Obi-Chukwu, the financial wizard behind Nairametrics, who's been helping Nigerians make sense of the chaos in our markets one chart at a time. We're breaking down the big questions. Will tax changes unlock growth or create new headaches? And what opportunities should businesses and individuals seize before they vanish? Welcome to the show, both of you. Welcome again. Great to see you, Ola. So I guess my first question wants to look at how 2024 ended. And I'll start with you, Ola. What for you was the big economic or investment takeaway for the year 2024?
So for me, 2024, I think in interacting with a lot of people, what I think was the major learning point was the economy itself. If, for example, the clouds are gathering, everywhere is getting dark, and you are still at home, and you want to head out, and your decision to dress up is to wear all white, and you're going to take bus, and for any reason it actually happens to rain, you know you're going to be stained, you're going to be wet. Yes. But it wasn't because of the weather. Okay. It was because you did not plan. Okay. Or you did not look at the external environment.
Message got loud and clear.
Right? Yeah. So for a lot of people, the handwriting was on the wall for a lot of things. But either they wished it away or they just thought it had never really happened, never really been this bad. Right? And so it hit them in the face. So I think for me, the key takeaway that I want to highlight is just that being aware of the economy and the fact that it would impact your pockets. Okay. You can't escape it. That's like the fundamental thing. And then the next thing is the fact that even in the noise, there were still some really good opportunities to make money. And so in the noise, you need to focus. Okay. Or else you will just keep saying the same thing and you won't realize until you come at the end of the year and realize some people actually did well. Yeah, they did. And you're going to tell us how to do well in 2025. Ugo-Dre, I'd love your take on what was your big economic takeaway for 2024?
I think for me is resilience and courage. I was actually quite surprised that Nigerians could stomach two major headwinds, and that is exchange rate depreciation and of course, fuel price increases. I mean, we went from 900, this is now official rate, from 900 to about 1,005 or so in 1 year, and then you've seen fuel prices go from about 400 or so to over 1,000. Let's not even talk about electricity price increases as well. So there were a lot of whammies that we took. And Nigerians actually chested this thing. They were like, what? We did chest it. And of course, courage is that people still got up and, I mean, everyone knew, like, look, you had to go fend for yourself. You had to go out on the street to work. And you could see that people who who basically survived the harsh economy partied hard in December because
they did.
It wasn't easy. I think so. I mean, as much as they could, So that to me was a clear message that, and there's a whole lot that this country can take, and not a lot of countries can survive what we do survive on a regular basis, and I think that's a huge positive for me.
Indeed, the survival instinct. So, I mean, this year, some of the policy reforms that are already on the table may also actually necessitate the need to plan. From a household perspective, we're just talking about telecom tariffs needing to go off, and that could even feed into inflation. So what do you think a household or individual should start the year with in terms of planning for that eventually? What would be your big advice around protecting your income and your purchasing power?
So I would start like this. The first thing is to actually plan. A lot of people start the year just, let's see how it goes. Riding on the back of the whole economy thing and being aware of it, we expect that inflation is going to keep going higher. What that means for the individual is that prices are going to keep going up, right? So if that is the case, what are the things that you know that you would necessarily have to pay for in the year? If there's an option of bulk buying ahead, all those kind of things, if there's a way you can bulk buy and negotiate a discount for that bulk purchase, do all those things. Another thing that you need to do is to actually plan your spending. This is not a year where you want to just wake up and spend. You need to have prepared for it. Why? Because you might need that extra loose cash that you're throwing away. That's another thing. And the final thing is to actually invest. The easier or the best or sure way to get out of a high inflation environment is to actually put money in something that will bring some additional cash to your pocket.
Yeah.
So whilst there might be a lot of noise, you might need to slow down and look at the opportunities available and start putting money away. Of course, that assumes that there's extra cash.
There's extra cash to put away. But every little helps, right?
Every little helps.
So, Ugodre, she talked about her sort of thinking around inflation going up. I also now want to sort of bring it to the sort of macro and global perspective. There are a lot of things happening on the global scene this year. The Trump presidency will have implications for everybody. But how do you see the global economy impacting Nigeria this year for good and perhaps in terms of potential challenges on the horizon?
Yeah, interesting question. There's a lot going on, or that would happen this year. From if you listen to a lot of or read a lot of the outlooks that you're seeing. If you go to the U.S., you have a new Trump presidency coming on board with his American First slogan, and so immediately you start to look at crude oil prices, which is very bent on lowering, because if he reduces crude oil prices, then gas prices in the U.S. should drop. So that could have potential impact on Nigeria. Especially because crude oil is pretty important to government's revenue. And so that's on one side. Of course, the upside of that is if crude oil prices drop globally, then fuel prices should also drop here. So that could also feed into inflation. And if you go to Europe as well, there's a bit of a sweep around Europe politically. So you're seeing new governments come in. You're seeing Europe also gradually looking like it's moving towards the right. So that could also have...
Looking like?
Yeah. It's moving towards the right. So depending on who is in power.
Yeah.
And so that could also mean immigration stress for a lot of Nigerians, particularly those looking to go school abroad. And so the Jackpot syndrome might take a bit of a slow down this year as well for a lot of Nigerians seeking better life outside the country. And then if you go to the Middle East, appears that no one really knows where this Israel-Palestine war is going to head to. Looks like with Trump coming in, we might see us gradually getting towards the start of the end of that war itself. Of course, this also depends on how Syria also emerges from the fall of the Assad regime. So that could also have potential impact on fuel prices as well now. But from major global perspectives, also what's happening between the US on one end and the West on one end, and of course China and Russia, and one eye on China, Taiwan as well, because the fear here is that if we continue, or if both sides continue to heat up arguments, then you could have potential conflicts that could affect global trade, and that is really where there's a concern. And if it does affect global trade, then that could also impact on Nigeria because of some of the things that we import, particularly. So that could result in imported inflation and could be a lot of pressure for us here in Nigeria. And then, of course, if you go back to the US again, there's this pressure, or there's this push by the Trump presidency to, get countries that the US currently has trade deficit with to sort of turn that around. And guess what? Nigeria is one of those countries.
Absolutely.
Nigeria has a super trade surplus with the US. And so that could be a bit of a concern, especially as we're looking for where to push some of our crude oil output to. So pretty interesting year round, for Nigeria. And one thing that I'm keenly observing is how President Tinubu is playing this. I think he seems to be playing it a bit well. You see what he's trying to do with the BRICS. See him also, playing with the Saudis on one hand, and also with the US. So looks like he's not putting all his eggs in one basket, because
even France
as well. Because at the end of the day, all you're looking for is investment, and you're essentially looking for the best kind of investment that you can get. All we've had over the last decade or so is foreign portfolio investments. So now what we need is foreign direct investment here. And I think if we're able to play our game pretty well, then we could just be that bride out there that everyone
Of course,
wants.
we often say there are no permanent enemies, just permanent interests.
Exactly.
But from an investor perspective, a domestic investor perspective, looking at how taking me as an individual as an example, looking at my strategy around investment in this economy, where should I really be pitching tent this year? Because out of all the macro dynamics that Ugodre has said, I can't kind of say it's going to be a economically nationalist year globally. The trends are pulling in so many different directions. I can't predict what the dollar will do. So what is my investment strategy as an individual?
So as a Nigerian, I would speak to someone that's just starting. If you're just starting, I would presume that your skill in terms of actual investment decision making might be low. So I'll start from the easiest things. I'll recommend a savings bond first, because it's low entry. It's easy for anyone to access. If we say treasury bills and bonds, there's a minimum 50 million, it might cut off a lot of people. And then on the back of that, I would say go to funds. Identify as many funds as possible and spread across them. And then minimize, if you're low skill, low risk, low skill-ish, minimize on actual direct asset investments.
When you say direct asset
I mean, like investing in a business.
Okay.
Investing
like venture capital.
Venture
really?
capital.
That's interesting. Okay.
I would say that because data, US data shows that 3 out of 10, only 3 out of 10 survive 10 years. And that's US data. Nigerian environment is tougher, right? So I would say our data will be worse if we actually collate it. So in this economy, in this time where your cash is actually quite scarce, if you are not skilled in recognizing the best investment, I would say slow down on that.
Okay.
Go for the safer. Why? Because you need liquidity. You need your money. You need to preserve your capital. And I think that's the major thing you need to focus on.
Capital preservation.
Yes.
As opposed to high-risk investments, that could deliver high returns,
That
really.
could.
So what does that mean for stocks, for instance, for the year? Seeing where the all-share index ended last year.
So yes, the all-share index ended 40% positive, which is good. But there's a stock selection process in that, which is why I said do funds.
Yeah.
Because the fund managers have the skill in selecting the best stocks, which if you are just starting, you may not be able to.
Yeah, okay, makes sense. I mean, this is very interesting. I was going to ask about dollar investments, dollar returns, and what that would look like this year.
So as a Nigerian in Nigeria, I'm very skeptical of pushing you towards dollar investments because it means you're going to put more pressure on the naira.
Okay.
Yes, but if you were going to go in that direction, I would presume that you are a high-profile investor. For a high-profile investor, the Eurobonds market is good because, 10-year US bond is at 4%. We are getting 9-10% on shorter tenors. So that's good. Venture capital is where I would push you to at this point because, Africa is the next frontier. So if you can get the assets in dollar terms, obviously, because we will be planning to exit in USD. So that's also good for you. And then, we had the domiciliary dollar bond, right? The local dollar bond that we did, that's also an opportunity. And then we have funds.
Of course.
Eurobond funds that you could also access. So there's that, yeah.
All right, interesting. Now, we already talked about the stock markets, but I wanted to talk about the NGX trajectory because sometimes it's really confusing me because in the middle of the year, you feel like you're in this battle space. But when you look at the big picture, you're like, hang on, not a bad end to the year. What does everything that has happened to our stock market in 2024 tell us about what the stock market's going to look like in 2025? I know that seems like a big question.
Yeah, before I get there, so just to dovetail on her point about this year investing, one of the things I said last year was basically spend now, save later, right? And I think that still holds now, especially when you're in a high inflationary environment. I probably took that to spend now, save wisely. It's very important that you front load a lot of your costs now than wait till later. Now, to the NGX, pretty not surprising. Let's even track back. This is not the first time we've seen the NGX on a winning streak. By the way, this is the 5th consecutive year of ending positively, and this year we beat inflation. So it's not the first time it's happened. I think it happened between 2002 or so, 2008. I think we went on like a 7 to 8 year winning streak as well, and then it happened during the Abacha years or so, Babangida Abacha years. We also had that kind of winning streak. So it's not impossible that we'd see the NGX return positively this year. Now, but what's interesting about last year was it wasn't necessarily fundamentals that drove the stock market. I think it was, so probably at the beginning of the year when we saw a lot of bank profits looking like it was going to go up. So that was slightly fundamental. But I think the fact that you had a lot of capital raising last year, you had a lot of exits as well last year, you had a lot of repositioning for a lot of companies, a lot of restructuring, capital restructuring going on. So what that meant was a lot of companies that had been for years undervalued now started reflecting their true value. And so that was what we saw. By the way, that 38 or 39% that we did last year, if you adjust it for exchange rate, probably not as good. And so it's no surprises that the NGX did well last year. So it might not do as well this year, but I don't expect to see the NGX post losses this year. We're likely going to continue with this trajectory, but it might not be as smooth as it was last year.
And of course, the exchange rate issue has an impact on companies in terms of their own operations, revenues, and profits ultimately. But I want to switch gear a bit and talk about the macro context. One of the big reform issues out there is tax reform. Of course, we know about the Nigerian tax reform bill, which has many different sub-bills, and we expect to sort of really take root this year. What impact do you see this having on households in terms of all these other strategies that you've mentioned? Many have talked about the fact that it's a very progressive system for SMEs, for individuals on low incomes. But how does that dynamic potentially feed into the investment strategy of a Nigerian household or individual?
So the first thing is, for a lot of people below a certain income bracket, there will be no taxes. So the assumption is that you have more liquidity to invest. That's the assumption. However, there's an inflation side to it where you might not necessarily have that much free income to invest. That's on one side. And the other thing to consider is VAT, right? If VAT actually increases and it's direct, every time you are spending money to buy anything, even this bulk buying we're talking about, you're going to be paying more.
Because VAT may go up to 10% or something.
Yes, that's what's being proposed right now. So that in itself, I think it has a deeper impact. And I say that because I believe in Nigeria, the number of people paying payee compared to the number of people paying VAT, the number of people paying VAT will be more. So in terms of the actual amount that you are going to be spending, the impact is going to be felt there. So from an investor perspective, what would I say? It's still the same thing. You still need to find ways to cut your costs and gather enough money to start investing. Because it's not going to be easy. It's not going to help your situation directly or entirely. But yes, it's a good thing in the long run for the country.
Yeah, I do know that some goods and services will be exempt from VAT. But I'd like to kind of hear your take on VAT from not VAT, tax as a whole, from the revenue and fiscal management perspective. Is this a really great piece of legislation and a game changer for Nigeria?
Well,
I know that's a very general question because it depends on.
So is it a game changer? I think so, because these are laws that we haven't touched in years. So is it a great piece of legislation? I think the jury is still out there. It hasn't been passed yet, so probably expect a few tweaks here and there, I think, before it does cross the finish line. I don't think it's going to have the kind of impact that we think it will have this year, because it's going to take time before it starts to really feed into the economy in general. But like she said, VAT particularly, I think that is one tax that will start to feel quite quickly. Now, one thing that they tend to talk about, particularly the government, is how this is very progressive and it's pro-poor and all of that. But hey, nobody looks at the consumption side of this. So the consumers themselves are poor. So if you do increase VAT, they are the ones that are going to pay for it anyways. So it will affect a lot of the things that the poor people do consume, and that would also in a way feed into price increases as well. So that could be the effect that you see. But on the more national level, the higher taxes that government is able to collect, and then the more money that they have to invest in infrastructure projects, and the easier it is for them to meet their budget plans, which we know at this point it's a little bit worrisome. You have a 47.9 trillion budget with 13 trillion deficit embedded in there. Very unlikely that they might hit that revenue target.
And certainly not through tax reform.
Exactly. So but then if they could, because the 2024 budget that they even have they've gotten close to meeting it from a variance level is also because of taxes, because we've seen non-oil revenue pretty much go up. So that could happen again this year. That is probably where you have a bit of silver lining, but I don't see that much impact in the tax reforms this year. Next year, probably.
Okay, so I want to touch on maybe just two more subjects very quickly. The exchange rate outlook. I know that's always a tough one, but we talked about inflation. It has a major pass-through effect on inflation. If we're going to tame inflation, we have to look at the exchange rate issue. Monetary policy reforms last year were just coming in like they were going out of fashion. What do we expect for this year, and how do you think consumers can hedge against any further serious depreciation?
Okay, so I would start with the end of the year. Towards the end of the year, we did the Nigerian bond, the Nigerian dollar bond, And then after that, in the interbank market, we found that offshore investors came in. Now, historically, when we have this kind of FX pressure, what usually tames it before we stabilize and move on to longer term investment is FPIs. Now, FPIs usually leave the country in December, but this year they actually came in December. So it was a change in trend. Now and it was on the back of the confidence of that bond issuance, right? And the Euro bond that we did also. Now, if we take that as a cue, then we might see offshore investors coming in Q1. If they do come in and they come in good numbers, then we might have some stability with FX. Now, the caveat is if oil prices go down, for example, which we've talked about.
And there's that risk.
And then there's that risk. Yeah, and then if there's one significant war that pops up that we're not expecting, right? Those are the things that can trigger a flight to safety. But if all those things don't happen, I want to believe that we might have some stability.
Okay.
Stability might be the key word here. We might have some stability. However, the good thing about it is that usually these things are not hidden. When they begin to happen, we see them in the news, right? So if those things are happening, you should be tracking and then you know what to do. Yeah.
Interesting. I mean, I'll take that as a positive projection. What's your take on the exchange rate?
One thing for sure is we're not going to see the sort of volatility and depreciation, rate of depreciation that we had last year. I think we did close to 40% last year. That's 2024. So I don't think we're going to see that this year. So that, to me, is a silver lining. We could see, I don't also see the exchanges strengthening. The 2025 budget assumes 1.4 to the dollar. I don't see how we get there at all. So I do see a bit of stability. Some of the policies that the CBN, put up last year, I think a lot of them we start to see progress this year as well. There's a lot of push for diaspora remittances. I think the non-resident BVN project, I think that's likely going to be implemented this month. I wish it was implemented last month, but it says it's going to be implemented this month. So there are a lot of areas where you could see forex inflows come into the country. But of course, that also depends on what happens globally. If there's any global conflict anywhere, then there could be flight out of Nigeria. But hey, guess what? We've gone through 2024 with very limited FPI. We went through 2023 as well with very limited FPI. So I think to a large extent, we've been able to be resilient, and without as much FPI as we expect, we're at $40 billion in external reserves, and we haven't even started tapping World Bank and IMF lines as well. So I think that you're not going to see that volatility this year. Like I said,
so you're saying the upside is good. So can you each just give me very quickly the one thing every Nigerian should be watching this year from an economic perspective? Just one thing.
I think for me, one thing that I would expect people to pay attention to is infrastructure projects across the country.
Okay.
I think this is one year where you would see a lot of infrastructure projects because this is the last year before politicians start to get into election mode. Yeah.
Okay, that's I thought you were going to say we should invest in infrastructure projects, but that's an interesting angle.
For me, I would say oil prices, because oil prices reflect a lot of things globally.
Yeah.
So if oil prices are going down, then it will affect the government spending. But it also help our fuel prices locally.
Yeah, sure.
But oil price is one thing that we should look out for.
Indeed. Thank you, guys. It's been so great having this conversation. I wish we could delve in a bit deeper. Obi-Chukwu and Oladele, thanks for joining me on the show. Thank you. Well, that's all we have time for in Business Week. I'm Rolake Akinbe-Fileni. Let's continue the conversation on X and do have a lovely rest of the weekend.